How long will the super micro rebound continue? Here to break it down for us is MarketBeat analyst Thomas Hughes. Thomas, it has been a wild 2 weeks for SMCI.
Yes, it has been a wild 2 weeks. The stock is up more than 100% since hitting its bottom a few weeks ago. I think this rebound could continue because they're kind of rebuilding some confidence in the stock price right now. There are some risks still ahead, but I think provided they're able to finalize their reports in a satisfactory manner, this rebound will not only continue, but it could turn into a sustained rally for next year.
Yes, we'll break down some of those delayed reports in a minute, but first let's kind of back up and talk about where this stock has been. Even though it might be trading over 30 right now, it's still a far cry from where this stock peaked earlier this year.
So last year there was quite a bubble formed with AI. That bubble peaked well above $120 earlier this year. Now we're down around 40. Um, that big implosion is the AI bubble bursting, but also compounded by those filing issues. The market really lost its confidence in the stock. Right now, what I see is the stock price is really disconnected from reality because trading in the mid 30s, it's really in alignment to where it was at the end of last year before the bubble formed. But we know that the business is more than 150% bigger. So the stock certainly deserves more premium that the market is giving it right now.
Right. With that AI bubble bursting earlier this year, investors might be a little bit wary about investing in AI stocks. Well, MarketBeat has a free premium report that can help. It's called 7 AI Stocks to Invest in, an introduction to AI investing for self-directed investors. Click the link below or scan the QR code to check out that free premium report that can help you dive into AI investing a little more. Now, let's talk about some of that loss of trust and distrust in this stock. Break down a little bit about what happened with earnings reports and financials for this company.
Well, it just started with some whistleblower testimony earlier this year, just kind of raising some questions about their practices and highlighting a problem they had in the past. That was compounded by a short sale report, kind of hit on the same subjects. The company has since been unable to finalize its last year's fiscal year-end report. It lost its auditor because there was some misunderstanding in the numbers they couldn't get past. Um, there has been a risk of delisting, but the recent news is that they got a new auditor, a trusted auditor, BDO, with the top five accounting firm globally. It's kind of restored some confidence in the market. The risk is that they won't be able to finalize their results, but the general opinion right now is that BDO will be able to do this in an expedited manner. And so whether it's good or bad, we should know pretty soon.
I'm sure the new auditing firm is a part of the reason for the boost in stock price, but why do you think the stock is starting to rise again after falling so low?
Partially, it's the rebuilding of confidence, but also over the holiday week, they announced that they've prepaid some debt. They closed out two different lines of credit they had, which is really a big deal because they're reducing debt risk, they're freeing up cash flow, they're improving the balance sheet, and again, they're just instilling some more confidence in the company's ability to progress as a going concern.
Yeah, and I think that's what a lot of investors are wondering right now is how far can this company progress? The stock price has certainly seen a lot of movement, but let's talk about the company itself. How successful is this business?
Well, the business is pretty successful. They're one of the leaders with direct liquid cooled servers, which is really important for AI. The AI microchips use so much power, they create so much heat that cooling them and keeping the data centers functioning is a big cost for the data center operators. So these liquid cooled server racks are really important for not only the efficiency of the chips, but for the efficiency of the operation. The forecasts for next year are still pretty good. The company's 150% bigger this year than last year. The forecast for next year are for another 20% growth. Those may be cautious estimates, just given the way things have gone this year. The analysts certainly have not a lot of reasons to be really aggressive with those targets.
Absolutely. So there's demand for their services. They expect to see growth for that continue. They're also working with Nvidia, which has some consumer confidence as well, correct?
Indeed, indeed. One of the things that helped build the confidence over the last couple of weeks is that during NVIDIA's earnings report and conference call, they gave Supermicro a shout out, which just kind of affirms the fact that NVIDIA is still working with them and that it's still important to the AI infrastructure.
Great. Well, let's move on to the stock price itself. This is what investors are really wondering. How far do we think this rebound could possibly go?
Well, I think the stock could gain a good 50 to 100% from these current levels just based on the way that the revenue and earnings are going. But where it goes soon and how long it stays there really depends on the news cycle and how quickly they're able to get these results finalized.
Now, let's dive into the analyst predictions a little bit more. Where are the most recent analyst targets at for this stock?
Right. So the most recent targets have it fairly valued near its current levels in the mid 30s. The consensus is down significantly from its peak, and we expect the stock to trade below the consensus because the new revision trend is lower. But even at consensus, we're looking at more than 100% upside. So I think that we're looking at a floor for the market in the low 30s with a potential for a 50 to 100% upside over the next 12 months.
Well, let's talk about any trading plays for this stock with all of the volatility happening with SMCI right now.
The best trading plays would be to wait for a price dip because we know it's going to happen. There's still a lot of uncertainty and it's a volatile market. So price dips would be a good time to get in a small speculative manner. And any time that it would rip or move higher would be a good time to get out.
Well, as we close out this video today, Thomas, the final question for investors out there is, do you think that this stock is fairly valued of where it's at right now?
I really don't. I mean, and there is a lot of concern with the reports. So I could be proven wrong. This stock could go to zero. But I think that trading at 11 times earnings is fairly undervalued compared to its peers, which are trading at, 20, 30, and 40 times their earnings. So I think that provided a positive outcome, this stock will rocket higher and could easily see a 50 to 100% upside.
That's some good news if people are looking for a stock with some big potential growth. Thank you again for breaking down everything going on with this stock right now, Thomas. And thank you for watching. Check out more of our videos for more info just like this on MarketBeat. Thanks again for joining us. And as always, happy investing.